This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Lugger Trucks, July 1st, 2019. U.S. steel production fell to 1.873 million tons on a slowing global economy with tariffs hurting global manufacturing. Oil rose to $58.47 a barrel due to the Mideast tensions with Iran, yet balanced with slowing demand and high U.S. production. U.S. oil production fell slightly to 12.1 million barrels a day, remaining high though. Growth remains limited by transportation of oil from the oil fields. Iron ore fell to $116.50 a ton, near the 5-year high, which was almost double 7 months ago, leading steel mills to raise prices. Scrap steel #1 heavy melt was steady at $235 a gross ton, a multi-year low. Upward price pressure remains due to high iron ore prices, but there remains downward pressure based on slowing demand. Hot rolled coil steel rose slightly to $26.19 as multiple steel mills increased prices on multiple products, mainly due to high iron ore prices. Copper rose to $2.72 on hopes of a China trade deal as it became closer, but copper remains very low. Aluminum rose slightly to 80.7 cents, also remaining low, but as said, a China trade deal is key to prices. Tariff news. The U.S. and China have called a tariff truce, which has China buying more items from the U.S., and the tariff negotiations are due to restart. The U.S. says Vietnam is the single most and worst abuser of tariffs as companies from China move there to ship at low cost to the United States. The U.S. stated that Europe is worse than China on tariffs. Together, these things will put downward pressure on global growth and commodity prices. China's June NBS Manufacturing Purchasing Manager Index stayed at 49.4. Anything under 50 means contraction. There were declines in new orders, export orders, employment, buying levels, and output, and as business sentiment weakened. May's U.S. new home sales fell a big 7.8% to 626,000 at an annual rate, the lowest since December, despite low mortgage rates. Sales were down 3.7% from last May and at the same rate as the 1960s, while less than half the record of July 2005. High prices and a huge $1.6 trillion of student loans is hurting home sales. Growth in the U.S. GDP was confirmed at an okay 3.1% in the first quarter, but not as high as 2012 or 2014 levels. Unfortunately, many are forecasting Q2 to be about 2.5%, not nearly enough to allow for reducing the huge U.S. government deficit. June's U.S. consumer sentiment was revised higher to a solid 98.2 as consumer future expectations were raised, while current expectations were actually lowered. Sentiment was lower than May due to the negative impact of tariffs. Importantly, the U.S. 10-year expansion just matched the prior record starting in 1991. Next month, it will become the longest expansion since the mid-1850s. Just great news. Wall Street's Dow Jones fell 77 points to 26,642, near the all-time record, mostly on news about what became the China trade truce. This was the best June since 1938, 81 years ago, but actually after the horrific drop that we saw last year. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.